Good, boys. In today's video, I'm going to be going over the Ethereum trade that I took last night. Took 2 break-even trades, 1 trade hit take profit, made around $520 on the night. But I want to go over kind of how I use the 90-minute time frame and what I look for when I'm on the 1 minute and the 5 minute looking for those entries, right? So I'm on replay mode here, and all we're looking at is the 90-minute, right? And we're as we can see, after we had that huge leg up on Bitcoin and Ethereum and all these cryptos, right, we're kind of stuck in this range, which is totally fine, but we can still play and trade the range. So what do we see? Well, we see that we have all this low resistance liquidity above, and then we have all this low resistance liquidity below, right? And we're kind of swinging on the 90-minute, right? I see this leg that gets swept and absorbed right here. All these equal lows get swept, right? I'm more bullish on a higher time frame view, but I like to trade second and third 90. Right, so all I'm going to do is mark out my confluences on the 90-minute here and identify what exactly I think is going to happen. So we have this 90-minute bearish fair value gap, right? And then we still have these relative equal highs right up above. So I'm going to go ahead, I'll mark those out as well. From there, I'm going to go down to the 5 minute or the 1 minute. Obviously, when I'm looking to enter a trade at 9:30 or 11, right, I'm entering those trades on the 1 minute. I'm not entering that trade on the 5 or the 15 or anything higher than the 1. So I'll actually go to the 1 here, and I will mark out 9:30 on the chart, which is actually back here. Okay, so this was the first trade that I had taken, right? What we had seen off of the open, again, equal highs above, equal lows below. We open and we gap up. With this gap up, we swept this high, right, with this 90-minute open. And as you can see, we're rejecting and failing to gap up at the top of this 90-minute bearish fair value gap. So with that being said, I waited for this candle to inverse this bullish fair value gap. As soon as we got that inversion, I took the short. Right? I took the short right here, targeting these equal lows, and I ended up getting break even on that trade. Boom, right? I ended up getting break even on that trade right here, right? Because as soon as we inversed, I entered on that next candle. Boom, that was my break even. And my broker here, here's the execution from where I took that short position. As you can see, as soon as that candle inversed that gap off of that 9:30 open high, I took the short, and then obviously we got break even right here, which was a great break even in my opinion, because we ended up continuing to go long. But then I wait and I trade 11 p.m. Why? What is 11 p.m.? Third 90-minute candle of the new daily candle, right? So daily candle opens up at 8 p.m. Eastern time. I'm trading the second and the third 90-minute candle that opened of that daily at 9:30 and 11 p.m. Eastern. So as we can see, right, similar context going into this 11 p.m. move, right? We did have the gap up with that 90-minute candle at 9:30, right? We did end up going long. However, right, what we can see is that off of this 11 p.m. open, we open here, we go high, we fail to gap up, we swept this high, as you can see with this absorption candle, right? We sweep the high, and then from there, we give this inverse fair value gap. Soon as we, oh, wrong tool. We give the inverse fair value gap right here. And again, as soon as we inverse that gap, I took the short position. And I took these trades on TikTok Live, right? Took the short position, same thing, targeting the equal lows that were put in where I got break even before, risking the high, same exact setup, 1 to 3R, got break even again. Then, what did I see? Right, well, I saw that there was a 5-minute bullish fair value gap back here, right? You know, you can just trust me or go back at the chart and look at it yourself, right? There's a 5-minute bullish gap there, and we're getting our V-shaped reversal right out of that, right? So we gave the push down, I got break even, we ended up going short, but what did we do? Right, we did not gap through this previous low, right? The context of this move is that we swept and failed, right? We swept and failed right here, and then as soon as, well, actually I entered before we gapped up, but as soon as I saw that sweep and that push up, right, that bullish candle close, I entered long on that next candle, and then obviously we had to hold through some chop. We chopped for about, another 20-25 minutes there, but I just took the long, targeting this high right here, right, and then risking this low right here. So about a 1 to 2.6, right? And as you can see here, order filled, made around $520, but we did end up taking those 2 break-even trades. So break-even trades are totally fine, right? Managed stops are totally fine. And, if your executions look like this, you had a good day. No, it's rough taking two back-to-back break evens. It's rough taking, one loss and then still having to execute later on in the night. But point being is that if you can just use that 1 minute and 5 minute context paired with your second and third 90-minute candle open, you will make so much money. So if you're not already in the free Discord, I signal trades like this all the time. All you got to do is click the code in there, sign up for the broker that I trade on. That's it. There's no paywall, none of that bullshit. Click that. If not, check out my next video. It's going to be going over how to take some swing trades on altcoins because money's here. Crypto is rotating, and we're seeing a lot of spikes in volume on a day-to-day basis. So if you're not making money with crypto, lock in. Time is here. Volume's here. And yeah, I'll see you guys in the next one. Thanks for watching.